Hey all, welcome to ShareTreck. This is Raj here. Friends, this is a special edition basically to talk about my thoughts on what's happening with the genomic sector, especially in light of the rate cut and the way the markets are behaving. This also includes my thoughts around what's going to happen in October and how things are going to play out overall. So please watch it till the end and let me know what you think about it so that we can recalibrate our thoughts around our genomic investments. Will genomic stocks respond to rate cuts? How will they respond? Are they going to go up or are they going to go down? How long is the wait before we can make profits? Those are the things we are going to talk about today. With that said, let's get started. Welcome back, friends. I want to first start off with ARC-G because it's the Genomics ETF that we have taken for reference. And if you look at ARC-G, it kind of encapsulates the whole story of genomics. We guys have been holding genomics for quite a while, and all the way from 2nd of April 2024 to right now, it has been trading in a range of 28.05 to 22.94. So basically it has been moving sideways with a lot of ups and a lot of downs. There has been no other pattern to predict what is going to happen. But you would notice that of late, recently, since the beginning of August, there has been a creation of higher lows, and there has also been attempt to create a higher high, but that attempt, I think, failed. So we have got a kind of conical structure that is developing out here, which may force genomics to decide where it wants to go. So right now I'm just going to extend these lines so that you can see what is happening out here. So this is the new development that I am seeing in genomics based on how ARC-G is behaving. So this encapsulates what we can look forward to in genomics sector, but that may not be the case for all the stocks. Some stocks might behave better. I'm going to contrast CRISPR Therapeutics against ARC-G and draw some conclusions later on in the video. But today we're going to talk about most of the genomic stocks. So if you look at our genomic stocks, we have a range of stocks. One is the kind of companies that manufacture equipment that are used to do gene analysis, so long read, short read machines, supplies and everything. Those are companies like PACB and Illumina. And then we have some companies which do diagnostics. It's like Grail. And then we have a whole bunch of therapeutics and platform companies. Among therapeutics and platform companies, I would count CRISPR Therapeutics, Beam, and Editas. So those are the companies I think are in those areas. And all of these companies may not behave the same way to rate cuts. For example, I think a company like Illumina and PACB might have a better traction basically because their clients would now have much more free money because interest rate has gone down and expansion can start. So if that is the case, then they might buy more equipment, buy more supplies, and Illumina and PACB might thrive. They may do way better than the genomic companies which do not have any therapies in the market and are still doing their clinical trials. So that is one level of refinement I can bring to this. Please give me your comments about this particular thought. The second thought is that the other set of companies that we have are companies which are creating therapies and are also platform companies. So I think platform companies will get a little bit of a benefit because any of the therapies that are in clinical trials ready to get monetized, when they come up to the FDA, I think most pharmaceutical companies will now find enough money to focus on those candidates and get them to market quickly. And if any of those are using CRISPR-Cas9 or prime editing or base editing, I think it's going to be mostly CRISPR-Cas9. Those companies will have to buy the platform license from CRISPR and Editas. So I think those companies which have got platform revenue will do slightly better than the others that do not have platform revenue. In fact, those companies that do not have license for CRISPR-Cas9 might end up paying to these companies. So I think that way CRISPR Therapeutics is better situated along with Editas. And then there are other companies which are just got therapies which are in clinical trials. So those companies which have got more therapies in advanced clinical trial will have a much better valuation in this market. I think companies like CRISPR come to mind. I think CRISPR Therapeutics stands head and shoulder above the rest in this aspect. So CRISPR will benefit from there. Then another theory that is doing the rounds is that, I think this is what Jim Cramer had come up with. He said that look for companies which are doing bad and a rate cut would benefit them. So the company that comes to mind immediately to me is Bluebird Bio, because Bluebird has got therapies in the market, but it's doing pretty bad. Misstatement of its financials and other things, and it needs money. So I think the biggest gainer from that point of view should be Bluebird Bio, but we have not yet seen any of the evidence of that so far. So I'm cautiously optimistic that probably funding might come to Bluebird and Bluebird might pick up. But this aspect does not benefit companies like Ginkgo Bioworks or, for that matter, CRISPR Therapeutics, because these companies have already got billions of dollars in the balance sheet and they are not looking for funding right now. So it may not benefit them right away. But all the companies which have got a very short cash runway might end up benefiting with the rate cuts that have been announced. Now let me look at CRISPR in particular. CRISPR seems to be underperforming QQQ, especially in the last 3 days. It has been very, very bearish, which basically indicates to me that money is going out of CRISPR and into QQQ probably, or money is not coming into CRISPR at the same pace that it's going into QQQ, and that's why CRISPR is underperforming QQQ. The other index I have out here for comparison is ARC-G. So CRISPR Therapeutics is overall performing better than ARC-G because I'm seeing higher highs and I'm seeing higher lows. Of course, the volatility is quite high, but still this is the right direction to go in. So if I was to just draw a trend line out here and another trend line on the top, you'll see that we have been creating higher highs and higher lows. So definitely the rate cut has helped CRISPR much better than the other companies. This goes contrary to what I was talking about earlier, but this could also be because of the fact that CRISPR Therapeutics is a platform company and it has already got a therapy which has been monetized, and next quarter we might see revenue coming in from Casgevy sales. Those are the aspects that would be giving a little bit of jump to CRISPR Therapeutics as opposed to all the other genomic companies in the ARC-G portfolio. So this is the way I'm looking at it. Now let us take a close look at CRISPR Therapeutics. What is happening with CRISPR Therapeutics is that it has been range bound since 2nd of August, and we have been trading within a range of 51.34 on the top and 44.58 on the bottom. So that's a good enough amount of range for anybody to do swing trading. Of course, day trading would not be possible with this stock, in my opinion, because it moves in one direction for a given day or two. So if someone was to do swing trade, they would have benefited. But again, there is not huge pickings in CRISPR Therapeutics swing trade because, as you would see, a good portion of consolidation is happening in the same area, well below the top and the bottom ranges. But of late, since 5th of September, we have been experiencing the entire range. We tested the top of the range at 51.34 on I think 18th or 19th of September, and since then we have been following these three red candles show bearishness. It's called three crows, and it's a very bearish sign. So it doesn't look great at this point of time, but if you look at it pre-market on the 24th of September at 8 a.m., it's looking good at 1.11% gain. But how the day will end, we don't know, because all the red candles are formed because we opened high and we closed low. So we might be in store for another red candle. For my perspective, I'm looking at 44.58, and I'm thinking that if we come closer to 44.58, I might buy for a long-term holding, because at that rate, with the rate cuts coming up and platform revenues firming up and the potential of cash JV revenue also coming in, it's all looking good to me from a long-term investment perspective. So I'm going to be looking to buy CRISPR anywhere around the $44 price range. So that's my game plan. If I look at the momentum is dropping, so that gives me a feeling that we still have an opportunity of testing 44.58. That's when I would move. MACD is bullish but moving towards the signal line in a bearish manner. So that's another factor to keep in mind. So that's what I'm thinking about CRISPR. Another good story I'm seeing here is Illumina. I am of the belief that Illumina is definitely going to continue going up. It's on a long-term bull cycle, in my opinion. It's got higher highs, and the higher highs are moving further away from this bull channel line, which shows that there's a lot of strength in this bull channel. And the higher lows are going up further away from this bull channel. So it shows a lot of strength in the price action out here. So I'm thinking Illumina is going to do well. Also, rate cuts, as I said, are going to stimulate expansion among diagnostic companies and also research setups, so that they go for more equipment and more consumables. And the same factor applies to PACB as well. And as you can see, we have been moving up on PACB. But remember, friends, we have to break through this resistance at 2.24 in order to see permanent upswing for PACB. Till then, we may, for that matter, be just bouncing between these two lines of resistance and support, at the top at 2.24 and at the bottom at 1.21. So this is what we are looking at. And unless we break through this resistance, I don't think it's worth putting money into PACB. So that's the whole summary that I have for the genomic sectors. I'm not going to look at Bluebird and DNA, basically because they have become almost penny stocks. And DNA, even though there is a reverse split that has happened, I think DNA is consistently weakening. They have to show some phenomenal result, and there has to be some spectacular press conferences which can lead to more enthusiasm in DNA. Till we see that, I think we are going to be struggling. My big disappointment is Grail. Grail is not at all doing well, and I have invested in Grail, and I'm considering whether I have to book my losses and sell it, because one of the big luminaries, I don't remember whom, had said that for you to be a successful investor, you have to embrace the concept of booking losses. And I'm struggling hard to do that. Hopefully I take the right decision. I don't want to do something like what I did with Tesla, where I sold at huge loss, and now Tesla is resurging. I would have probably saved the I would have probably reduced my losses, and I would have been better off at the end of the year if I had not sold Tesla. So that's a big lesson for me, and I would like you guys to give me your feedback in the comment section. Did I do the right thing by selling Tesla, and how would you have handled it, and do you still have Tesla in your portfolio? And my thoughts about Grail, selling of Grail, what do you think about that? Please put your comments there. And with that, my friends, I would like to bring this video to an end, and look forward to hear from you. Thanks, and have a great day, and bye for now.